Hello and welcome. 5 years back, GST was introduced to subsume various taxes and duties. Earlier, we had excise duty on manufacturing, VAT on sale of goods within the state, CST on sale of goods outside the state. Then we had service tax, entertainment tax, local body tax, and so on. All these taxes and duties were included in one basket called GST, which is a good thing. Second, to remove cascading effect, that is to remove tax on tax effect. In pre-GST era, service providers were not allowed to avail VAT credit on purchase of goods used for the purpose of business. Similarly, traders were not allowed to avail input tax credit on services used for the purpose of business. This ITC restriction in a way has led to an increase in the cost of goods or services, and we as end consumers have to bear the brunt. With the introduction of GST, we can now avail input tax credit on goods or services provided these are used for the purpose of business. To put it differently, if it is for personal use, then no ITC. Now the next question is, has GST really helped remove completely this cascading effect? In this video, we are going to try and find answer to this question. We have just learned that we can avail input tax credit, that is the tax that we pay on purchase of goods or services, provided these are used for the purpose of business. But to avail this input tax credit, you need to satisfy 5 conditions. First, you need to have tax invoice. Second, you should have received goods or services. Third, your supplier should have paid taxes. Fourth, you as a buyer or recipient should be regular in filing your GST returns. Last, the transaction should appear in your GSTR2B. GSTR2B is a monthly statement of input tax credit which is auto-populated on the basis of GST returns filed by your suppliers. So does it mean to say that if you satisfy these 5 conditions, you can avail input tax credit on any good or service that you procure for the purpose of your business? The answer is in negative. That's because GST law has specifically disallowed input tax credit on certain goods or services. This is the ineligible input tax credit, also known as block credit or negative list. If you buy goods or services, the ITC on which is specifically disallowed, then even though this transaction appears in your GSTR2B, you need to reverse ITC when you file your GSTR3B. GSTR3B is a summary of purchase and sales. If you would like to know how to report these transactions in your GSTR3B, you may consider watching my earlier video, the link in the top right corner. Now back to today's topic. If you don't reverse this input tax credit, then you need to pay interest at 18% per annum. So in this video, we are going to discuss some of these transactions on which input tax credit is specifically disallowed. For ease of understanding, I have classified these transactions into 3 broad categories. The first, goods or services, in which we have A, motor vehicles and other conveyances, B, other specified goods or services. Second category is immovable property. Third, others. In this video, we are going to discuss each of these heads in detail, starting with motor vehicles and other conveyances. First, let's understand what are these other conveyances. Other conveyances include vessels, that is ships and aircrafts. Common people like you and me are not going to buy ships and aircrafts, so let's keep them aside and focus on motor vehicles. Motor vehicles means vehicles which are meant for transportation of persons, which are having seating capacity of up to 13 persons including the driver. This would include even electric vehicles. So if you buy a car or a two-wheeler, even you use this for the purpose of your business, you will not be able to avail input tax credit because this is specifically disallowed. ITC on not just car, even on insurance, periodic service, repairs and maintenance expense that you incur on such vehicles, even ITC on such expenses are also disallowed. Now the key things to note here are: 1. This ITC restriction is applicable for vehicles which are meant for transportation of persons. So that means if it is not meant for transportation of persons, say if it is for transportation of goods, then no restriction. Second, If the seating capacity is more than 13, then even though the vehicle is meant for transportation of persons, you can still avail input tax credit. That said, there are certain exceptions in which this ITC restriction is not applicable. That is, the situations in which you can still avail input tax credit on these motor vehicles. Let's see what are those. First, if it is for further supply. Let's say you are a car dealer. If you buy cars from car manufacturers, you can avail input tax credit on it. Second, if you are into the business of transportation of persons, say you are into cab services, if you buy a car for your business, you can avail input tax credit on it. Then if you are into providing training on driving, say you run a driving school, so if you buy a car for your driving school, you can avail input tax credit on it. Not just on the vehicle that you buy, you can avail input tax credit even on insurance, periodic servicing or repairs and maintenance expenses that you incur on your vehicle, provided you fall under this exception category. Now let's move to other specified goods or services. First, food and beverages. Let's say you go to a restaurant with your client. Now the restaurant would charge GST on the food that is served to you. You can't avail this input tax credit even though it is your business expenditure. Second, outdoor catering. Let's say you hire a caterer for your team outing. So you cannot avail input tax credit even though it is your business expense. Next, expenses related to beauty treatment and cosmetic and plastic surgery, no input tax credit. Then no ITC on health services. Next, leasing, renting, hiring of cabs, no ITC. Let's say you hire a cab for your client, you can't avail input tax credit even though it is your business expense. Then membership in a club, gym or fitness center, even if it is meant for your employees, you cannot avail input tax credit. Then life insurance, health insurance, even if it is for your employees or for your business purpose, you cannot avail input tax credit. Then travel benefits, that is leave travel allowance to your employees. You can't avail input tax credit on airfare, train fare, bus fare and so on. So the crux of this is, if you incur any of these expenditures, even if it is for your business, you cannot avail input tax credit because it is specifically disallowed. Having said that, there are certain exceptions even to this head. Let's see what are those. There are some situations in which you can still avail input tax credit. First, if it is for further supply. Let's say you run a restaurant. If you buy beverages, you can avail input tax credit on it. Then next, if it is part of a composite or mixed supply. Composite or mixed supply means two or more goods or services sold as a bundled supply. If so, you can avail input tax credit. Then if it is obligatory for you as an employer to provide these goods or services. For example, it is mandatory for you to provide cab services for your female staff working in night shifts. So, if you fall in this exception category, then you can avail input tax credit on all these expenses. Now let's move to the second category, immovable property. To construct a building, we use goods and services on which we pay GST. For example, we pay GST on cement, steel. If we hire an architect, we pay GST on consultancy charges and so on. So if these goods and services are used for the purpose of office building or factory, godown, or for any business of your own, you can still not avail input tax credit because it is specifically disallowed. Or let's say instead of you buying goods or services, you hire a works contractor who charges GST on construction services. No ITC even in this case. However, when works contract services are provided as further supply, then ITC is available, and this is an exception. Usually the works contractor hires subcontractors, say for electrical work, plumbing work and so on. When these subcontractors charge GST, the works contractor can avail input tax credit because it's going to be used for further supply. Construction here includes not just construction of a new building, it includes renovation, alteration or repairs to the extent it is capitalized in your books. Now let's move to the last head, others. Goods which are lost in transit or in your business premises, no input tax credit. Goods which are stolen or destroyed, say due to fire, no input tax credit. let's say the shelf life of the stock is over, or some goods have become useless and you intend to write them off, no input tax credit. Then if you give goods as gifts or free samples to your clients or distributors, no input tax credit. So far we have gone through all these three categories in detail and understood that if we buy goods or services falling under these categories, then we will not be able to avail input tax credit because it is specifically disallowed under section 17 subsection 5 of CGST Act. But if you fall in the exception category, you can still avail input tax credit. If you are not in that category, then you need to reverse this input tax credit. Otherwise, you need to pay interest at 18% per annum. After going through this concept of ineligible input tax credit, has GST helped remove completely cascading effect? What do you think? Let me know. That's all I have for you today. Hope this was helpful. Thank you for watching.